Hey all, good morning. Hi, hot dog. Thanks for joining me. It's nice to be back again doing some live stream. And I thought that I'd take the opportunity to improve our live stream a little bit so you can see me on the full screen in the morning. I hope this goes without a glitch because trying anything new and stretching our abilities is always a bit risky, especially on live stream. So here's to it. And yeah, things are looking much better. The long weekend, we took the opportunity to refresh our mind. Tomorrow, 4 p.m. would be almost a week since our beloved Corey left us. Ruffian has improved. We are all in much better shape. This is part of life. That said, good morning, everyone. US stock futures are pointing lower as Wall Street kicks off September trading after the Labor Day holiday. The Dow and S&P 500 futures, last I looked at, were down around half a percentage point, and the Nasdaq is lagging as tech shares are seeing more profit taking. September, I believe, is historically a tough month for stocks, and this year looks no different, especially with investors juggling fresh legal uncertainty and looming economic data. It all looks a little bit shaky to start this month. And on the corporate front, Kraft Heinz made waves by announcing a split into two companies in a bid to reverse weak sales and adapt to choppy consumer demand. And on the earnings front, big names like Zscaler or Zscaler, Macy's, and DocuSign are set to report this week, though the pace of earnings is slower compared to August. Tech shares are under pressure after Marvell Technology missed estimates for revenue. It dragged down the entire sector late last week, and I think the effect seems to continue this week as well. We'll have to see what happens when the market opens. Maybe it could reverse the trend. But on the other hand, if you look at the tariff verdict from the appeals court, it has fueled uncertainty. One of the day's biggest headlines is that the U.S. Court of Appeals ruled late Friday that most of President Trump's reciprocal and China, Canada, Mexico tariffs were illegal, a major challenge to the administration's headline trade policy. The ruling allows the tariffs to stay in place through mid-October. That is a stay order pending a possible Supreme Court challenge. But business leaders and investors are now facing a new round of uncertainty. The legal back and forth adds more volatility to the market's outlook, especially with ongoing global trade tensions. And friends, in this regard, I had published a video during the weekend where I was speaking about the possibility that if the court decides to reverse this tariff order, then all the monies that the Trump administration has collected so far, which run into billions, will go back to the companies. Now, the quantum of that money is going to be bigger than any stimulus that has been given so far. And as far as those companies are concerned, their pricing in the stock market is now based on the fact that they're eating tariffs. Because if anything is in the news, then that is in the price. So if that is the case, and if it remains the fact that because the CPI has not shown the tariff impact so far, which means most of the tariffs were paid by the company, and they are going to come back. It will become cash rich, and those companies might do some buyback, and those companies may give some special dividends, or they may dump money into AI to expand their AI capability. So anything can happen in those areas. So that, I think, will be a big boom for the stock market in 2026. And of course, we should remember that the stock market is not the real economy. The stock market is separate from the actual economy. So the real customers may or may not feel much of this, except in the terms of jobs, if it results in creation of new jobs. So that said, investors are closely watching this week's economic releases with the August ISM manufacturing PMI and Friday's non-farm payroll report as crucial guides for Federal Reserve's policy. Rate cut bets remain high, with markets pricing a near 90% chance of a quarter-point Fed move this month. Persistent inflation and underwhelming consumer demand continue to weigh on forecasts, while the legal wrangling over Fed governance could inject more unpredictability into monetary system and the monetary policy. So if we zoom back and look at the big picture, I would say that uncertainty reigns in short, and robust summer earnings haven't translated into some September optimism. Investors are striking a cautious tone as tariff drama, Fed uncertainty, and a tricky economic calendar combine to keep appetite low. The appetite for the risk remains low. These factors are likely to define price action for today and possibly for several weeks to come, unless there is a huge catalyst that happens in between. The weekend marked with the realignment of Russia, China, and India, along with a host of other smaller countries. And this was the SCO summit. And that also is casting a long shadow, along with President Trump's domestic issues with regard to many GOP congressmen having really difficult town hall meetings. So that's the backdrop in which we are looking at it. And with that said, let's go and have a look at the indices and let's do our technical analysis and wind up this session and get ready to make some real money in the market. So this means we got to get out of the regular screen out here. Please bear with me while I just get everything sorted out, so that we can have a look at what's happening in the markets. Now, let's go in and look at this daily chart and go into the futures. In the futures, we have S&P 500 futures. I've removed a whole lot of lines, and I've left a few lines which are relevant for us today. If you look at the S&P 500 futures, we have gone below the earlier support that we had at around 6,474.75. And that now becomes a resistance. And our support happens to be at 6408.00. And I can see Hot Dog saying, I think we are going to have low volume till FOMC in a couple of weeks now. That could be a good possibility because many people will be jittery. So let us see how it goes. Point taken, Hot Dog. 6408 is going to be the next support. Failing which, the support following that will be 6,337.25. And then we'll have some strong support out here where the diagonal line of support intersects with the horizontal line of support at 6,286.50. Overall market sentiment is bearish. MACD is bearish. Momentum is ready to go below average. So this is the overall picture for S&P 500, which shows tremendous weakness at this point of time. NASDAQ is also looking similar. We have the reverse head and shoulder ready to pop. And we have bearish MACD, bearish market sentiment, and momentum already below average and falling rapidly. So we have got the next support, which is going to be somewhere around 22,440.13. That I think is going to be the next support for us. Let me plot a couple of supports. One support is going to be somewhere out here. So this is the first support. I'm going to mark this in green. This is going to be in the region of 22,680. So this is the first support that we are looking at. If we breach this support, then we'll talk about anything else that we may have. Next, we have dollar index, which is improving quite a bit. I didn't expect that to happen, but we'll see what happens as the market opens. All the yields are going up, and the 20-year yield has also gone up. This is not very good for the mortgage market and the underlying economy. And also the Fed's borrowing capability, which means that the Fed will continue to borrow with T-bills and not going to the long end. And therefore, the difference between the yields on the long end and the short end will become higher and higher. Now, I'm also looking at Canadian 5-year bonds because they are linked to our mortgage rates. And this is also staying below 3%, so it is good for us. But somewhere down the line, I'm expecting the Canadian 5-year to depart away from the US 5-year and start easing for the Canadian mortgage market. And our market needs a lot of support. The economy is in the doldrums, and the Canadian Fed has to cut the rates in the next meeting. So that's what I'm looking at out here. Next, let's go on to look at the indicators. S&P 500 has got a very strong support at 6,435.25 today. And the next support happens to be at around 6,427. So these are the two levels at which we have support. If we open below this, as we saw in the futures, we were very weak. If we open below this, then I think our next support is going to be somewhere around this diagonal line of support from a long-term channel. I'm just going to zoom out, come back and show you the long-term channel. So this was the long-term channel on which we were traveling. So we are likely to come back and test a support at around 6,244.14. And our market sentiment is bearish. MACD is also bearish. And momentum still seems to be pretty good and above average. We have to see what happens out there. NASDAQ also is looking a little bit weak. We have got the reverse head and shoulder formation taking place. You have a head and shoulder formation taking place. You have a shoulder, a head, and another shoulder. So we'll have to see if it gets triggered. But right now, I think our support is going to be 23,287.36, failing which the next support is going to be around 23,193. And let us look at VIX, which has exploded. It's gone up 11.79%. And that is a significant jump in the volatility, which means that the market is going to be moving downwards. Gold has improved significantly. It has gone up 1.20%. And gold being up and also dollar index going up shows that gold is saying that underlying problems are significant. Money is moving into gold. And also, friends, I was reserving this for a separate video, but many central banks have increased the gold reserve and decreased the dollar reserve. So that's another aspect that's happening. And it's logical to think so too, because with all the tariffs being put in place, the need for dollars has gone down. Because the US pays in dollars, and then that dollars is received by all these countries, and they put it back into the US bonds, and therefore the dollars not received is not going into the bonds, and as a result of which the yields are starting to go up for the bonds, and we'll see the dollar index also going down after the market opens, in my opinion, and gold is going up. And let us look at QQQ, which shows that pre-market QQQ is down 1.16%. And I'm just going to close this out by saying got it, this mandatory thing from TradingView platform. You will see that we are down 1.04% in pre-market action. And that I think will lead into a lower market open. Let's go on and have a look at AI. We have got NVDA. NVDA is down, and it's down 2.14% in pre-market sessions. And we are at 170.46 as far as the pre-market is concerned. And our support is going to be 165.78. Our resistance is going to be 173.90 for today. Market sentiment is bearish. MACD is bearish, very bearish, and momentum is below average and it's dropping. There could be opportunity to buy NVIDIA, which again remains a blue chip and the foundation of next industrial revolution. So I'll be looking for opportunities to dollar cost accumulate NVIDIA. I've already booked profits and I don't have any NVIDIA on my portfolio. I'm totally shorted. I have shorted S&P 500 3 months ago. I have shorted MAG 7 3 months ago. They're all in deep red. I'm hoping that we'll start recovering some today. And my strategy is to dollar cost average it further so that I can meet the price point of the market and start having some profits and reducing my losses. Overall, I think I'm looking good this time. Meta is down 1.45% in pre-market trades. And if you look at Google, it's down 1.40% in pre-market trades. And it's going to get a really good support at around 210.50. And right now, it's at 210.50 in the pre-market session. And the second support for Google is going to be at 207.70. Amazon is down 1.44% and it's at 225.60. So it's going to get a very good support at around 219.48, which is this green line that you see out here. Apple is down 0.65% and it's going to get really good support at 223.08. Microsoft is down 0.67%. It's traveling along this diagonal line of resistance, which has turned into a diagonal line of support. And it's going to get support today at 498.75. Pre-market, it's at 503.34. Friends, I've also shorted Microsoft using MSFT, which is in the red. And I'm expecting that it's going to come into the positive very soon. and I would probably take profits on that on the way down. Tesla is down 1.67%, and it's hitting this support at 329.81. And also this diagonal line of resistance gets converted into a diagonal line of support. So a very strong support at 330.36. Right now we're at 320.27, which means this support has been breached, and both of them now become a resistance. Let me mark that as a resistance. So the next support happens to be 299.45 for Tesla. And friends, I have got TSLQ, 300 of them in the red. So I'm looking forward to getting some profits and clawing back some losses. Oracle is down 1.84%, and we have a diagonal line of support today, which is going to be giving support at 220.18. Right now we are at 221.97. Of course, my wife works for Oracle, full disclosure out there. I don't have any stocks of Oracle, but she has got a lot of stocks from ESOP. So her stock values have been decreasing steadily, but she doesn't trade on anything, and she doesn't take my advice at all. So she's fine. She's got a lot of stocks there. I'm happy for her. AMD is down 2.05%. AMD and NVDA both have got their fortunes tied together and to China. And that's the biggest market out there. So let's see what happens. But I have got a double top target, which takes us to 144.57. Today we are at 159.30 in pre-market action. We will get momentary support at 156.95, but ultimately we are heading towards a gap fill and then to reach 143.62. And we have SMCI, which is at 2.96% drop in pre-market session. It's at 40.30, and it has got some support at 39.10. It's a minor line of support. Again, I've shorted SMCI with SMCZ, and it's already in the positive. So I'm looking forward to gaining more profits in that as the market goes down. And let's look at Broadcom. Broadcom is down 1.75%. It has got a support at 290.74. And we have the pre-market action at 291.83. So this support, if it holds, is good. Otherwise, we are going to look at the next support at 264.73. And then we have Palantir, which is down 3.16%. The next support is 144.73 for Palantir. SMH is the semiconductor ETF, which is down 1.86%. It's at 284.89. I think it's going to get a good support at around 281.31. So that's going to be the support for SMH. Tempus AI is down 3.47% in pre-market trades. I think it should get a very good support somewhere around 66.83. So that said, I would like to go and have a look at Rigetti. Rigetti is down around 1.85%. It's at 15.93. And my strategy is going to be to buy back whatever I sold at a loss at 16.10 and get the same number of Rigetti shares and get the cash back into the account. It may not look at as a profit in my portfolio, but it will be clawing back some of the losses that I had. So with that said, let us go on and have a look at Genomics. In Genomics, Prime is down 1.54%. Friends, as the indices go down, most of the genomic stocks will go down. The potential exception could be companies like Vertex, CRISPR Therapeutics, and Illumina. Those could be the exemptions. Apart from that, all the other genomic startups that we have, without any therapy in the market, they're all going to be suffering big time. That's my thought process. If you have any other thoughts, contrary thoughts, please put that in the comment section with your rationale. Intelia is down 0.40% in pre-market trades, and it's going to get a support around 11.42, but right now it's at 11.31, so that support line has now become a resistance. So the next support is going to be at 10.17. And then we have Caribou Biosciences, which is up 2.14% in pre-market trades. I don't see any news item out here, but this could be a sentimental move or whatever. I don't know, but I think by the end of the day, Caribou will also come down and it could get a support somewhere around 1.64. Beam Therapeutics is down 0.73%. The next support is at 14.89. And then Altimin is down 0.78%. It is traveling on this diagonal line of support. Editas is flat in pre-market trades. We had this diagonal line of support, which is supposed to give us a support today at around 2.61. Pre-market, we are at 2.57 flat. That's where we ended yesterday or in the last trading day. So now this diagonal line of support will become a resistance. I'm not changing the color right now. I don't want to jinx it. Let us see what happens when the market opens. I'm thinking that it's going to open down and then it's a bottomless pit out there. Illumina is down 0.55%, but it's got some support at 98.73. And right now in pre-market, we are at 99.41. We have a head and shoulder pattern that we are looking at, which could get us down significantly. And the trigger for the head and shoulder is somewhere around 93.07. So if we go below 93.07, it's going to be a big fall. And if that happens, I would buy Illumina because the cost price of this share is very high. At the most, I may go for 100 shares, and I would do that with dollar cost averaging, 50 lots of 50 at a time, and 100 would be the maximum that I would hold. So I'll be very careful with that. CRISPR Therapeutics is down 1.79%. We had the head and shoulder pattern, which showed us that we have a target of 41.23. We are marching towards that, and the support for today is 47.39. Allogene is up 2.65% in pre-market trades. Resistance continues to be 1.35. Grail is down 0.58%. Support continues to be 31.90. Pre-market, we are at 32.60. PSCB is down 1.15% and support is at 1.22. Pre-market, we are at 1.30. RG is down 1.29% and support continues to be at $23. And pre-market, we are at 24.40. Vertex is up 0.04% in pre-market trades. Ginkgo Bioworks is down 2.92. I am facing a loss out here. I'm just going to magnify this and show you that technical analysis is still working. This diagonal line of support continues to give support, and for today the support is 12.15. Right now we're at 12.30. I'm expecting a bounce back from here, hitting the resistance at 12.46. I'm going to mark that as red, and we have to break out on the upside because that's what bull flags typically do. But market sentiment is bearish, MACD is bearish, but tending towards the signal line, waiting to cross over to the bullish side. Momentum is above average and picking up. So overall, I'm thinking that the chances of us breaking out on the upper side is higher than the downside. And if we did break out that way, then I'm going to move this to a point out here, and let me wind down this chart and say our target will be 18.05 for Ginkgo Bioworks. I put my money into it. I'm hoping that it goes that way, but it's only probabilities. There is no sure thing. So that's where we are. Now I'm going to look at Precision, where I've got 500 shares left. It's up 1.77%. In pre-market trades, and it's at 5.49. So it continues to make moves and consolidate. I'm holding on to my last shares, but I'm going to start moving that money, the profit that I made on Precision. I had bought 1,000 shares. I just have 250 shares left. I've taken profit on the rest. That money is going to go into Rare, which is basically Ultragenics. It has got a good product. It has got manufacturing experience. All it has to do is to fix the manufacturing issues that FDA pointed out, and then I think its BLA might get approved because there was no observation on the clinical trial results itself. So I'm thinking that it's a sure thing. And pre-market, it's up 0.63%. So I'm going to start dollar cost averaging today. If there is any sudden drop because of the overall market sentiment after the market opens, that will be the opportunity for me to buy some. But as compared to Precision, which was just a $1.92 share, I won't be buying 1,000. I might be aiming for just 100 shares, out of which I'll buy 50 first and another 50 later. It'll be dollar cost averaging. I'm waiting for the FDA to say something and for Rare to release some press information saying that they have given information back to FDA or invited them for a re-inspection and get some of those dates, because those dates will determine when this share can start moving up. And again, all of these things are my personal opinion, my friends. It's not financial advice. Again, let me remind everybody the ethos of this channel. I'm a retail investor. I'm not an investment expert. The reason I started this channel is to show my thought process and get other retail investors like myself to build a community around here and fearlessly share their thought process, so that our community together can become better retail investors. So with that, my friends, I'd like to bring this session to an end. And if you guys have any questions or anything that you want me to discuss, I'm really happy to do that. If you have any tickers you want me to evaluate, I'm happy to do so. So if I'll wait for a few seconds because there's a lag in the stream. If I don't hear anything in a few seconds, I'm off to my breakfast, and I'll be getting started with the next videos for the day. Okay, friends. So with that, I would say thanks for joining, and bye for now. So thanks to everyone who joined. I'm saying bye, and I'll catch up with you again with the next video to be released later today.